Hello, welcome to the European Open Briefing for Thursday, January the 26th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. So the dollar is still stuck near 2-month lows, and this is on concerns about the direction of US policy on trade and the potential impact on the US economy. But we do have quite a bit of positive risk sentiment, and that's boosting equities, particularly US stocks, which closed at record highs yesterday. We saw the Dow Jones breaking above the 20,000 level for the very first time. In other currencies, the pound is at 6 weeks highs, and this is on hopes that the UK will be able to come to a quick trade agreement with the US. And of course, we've got that meeting between Theresa May and President Trump this week. So there's a lot of expectations that that meeting will lead to positive developments. And the New Zealand dollar is the other main mover this morning. The Kiwi was boosted by better than expected inflation data, though it did fall back a little bit afterwards. But let's start with the dollar-yen pair. We can see the dollar has been pretty much range-bound over the past couple of days. It's unable to have benefited much from those pro-growth policies by Trump, mainly Trump has signed executive orders to ease regulation on manufacturing companies. He also cleared the way for two major oil pipelines to be speeded up on the two major pipeline projects. But despite that, the dollar is still hovering in its recent range. It's currently around 113.60 yen. The dollar index is doing even worse. It actually hit a fresh 8-week low earlier today. That positive risk on sentiment did give a boost to US Treasury yields. They rose to 1-month highs, but the dollar doesn't seem to have benefited from those from that increase in Treasury yields. As we can see, the dollar is pretty much range bound, if not slightly weaker. Let's have a look at the Dow Jones here in the chart, and then we also have gold. We can see that as the Dow Jones has been rallying, gold prices have come down, although we can see that since January the gold prices did recover, but it's since come down again, and the reason for the fall of the past 2 or 3 days is mainly because of the that boost in equity prices that's made gold less favorable. We saw, of course, there's been more focus on pro-growth policies by Trump midweek this week in comparison to early in the week, and that's raised expectations of higher growth and higher spending in the US, and that's boosting US companies. Although stock markets in Asia have also benefited from that positive risk sentiment in the US, most Asian stocks were up today. Let's move on to the New Zealand dollar now. We can see that there was a bit of a surge in the Kiwi. It jumped to an 11-week high of 0.7312 against the US dollar, and that came after positive inflation data. Quarterly inflation in New Zealand jumped from 0.4% in the third quarter to 1.3% in the final quarter of 2016, and that's slightly worse than better than expectations of 1.2%. And that takes the CPI rate to within the Reserve Bank of New Zealand's 1 to 3% target band for inflation, and that pretty much means that the RBNZ is less likely to cut interest rates over the coming months. Although we can see though the Kiwi has later drifted lower, and it's currently back below the 0.73 level, although the reduced expectations of rate hikes should provide further support going forward. Let's move on to the pound and the pound dollar and euro pound now. The pound has been doing rather well this week. We do of course have those expectations that the UK will reach a quick trade agreement with the US, but also we've had those developments with Brexit. The Supreme Court ruled that the government does need to seek parliamentary approval before triggering Article 50, and also Theresa May did concede to demands by opposition MPs to publish a white paper outlining some of the details on the government's Brexit plans, and the fact that we are seeing more clarity, and the fact that MPs are being now able to have a greater say on the government's Brexit plans. That's giving a boost. That's helping investor sentiment, because it's less likely that the government will opt for a harder Brexit as such. The pound hit a 6-week high, $1.2662, and it's reached a 3-week high against the euro of 0.8481 per euro. Now, before we go, let's have a quick look at today's economic calendar. We can see the New Zealand data out earlier today. We've got the first estimate of GDP in the UK for the fourth quarter. It's expected to come in at 0.5% quarter on quarter. We don't have much other European data out today, and then in the US session, it's fairly busy. We've got the advanced goods trade balance coming up. We've got the weekly jobless claims, and we've got the market services flash PMIs, as well as new home sales. And also just to note that Chinese markets will be closed from tomorrow for 1 week for the Lunar New Year celebration, so it's likely to be a fairly quiet day tomorrow in Asian trading. That's it from me. Thank you very much for watching, and have a great day.